Good morning, good afternoon, wherever you find yourself. I'm your host, Wale Yabua, and this week we are bringing you another topic, another discussion, so that we could help our community build, grow, and also learn so many things about crypto. So this week, we are fortunate again to have our usual guest, highly guest, that is Mr. Frank Tebia, who will be helping us discuss the topic that we proposed today. Now, today, what we want to do, discuss, and also learn more about is the decentralized finance and Web3 innovations that mostly we see around. So today, that is our topic. So most important, like DeFi and Web3. That is what we are coming to discuss today. So I think we would start so that we will have more time to do a bit more of explanation for our listening, also our audience as well. So Mr. Terry, you're welcome.
Thank you, Mr. Wali Yawua. It's a pleasure having me back on your show again, your podcast. I'm really honored, to be invited back again. Yes.
Thank you very much. I'm also really grateful for getting the time for this podcast as well. So today we are looking at DeFi and Web3 innovations that we find in the crypto space. So first, what we would want to do is, in simple terms, if you can explain DeFi and also Web3 for any person who is new into this crypto game.
Okay. So basically, the era in which we are in is called Web3, and meaning that the current internet that we have is more centralized. It's you read and you can also write. It means that you take information from the website or the app, and you can also input your request and you get some feedback. What we have now is called the Web3, which is the read, write, and then you own. Okay. And you can do all that without any intermediary. The Web2 that we have now, you need an intermediary to be able to sort of like communicate with somebody else. So for me right now, speaking with you and your audience, we need to go through Zoom, which is an intermediary that allows me to be able to talk to you. Okay. And they are partners and all that. Okay. So in a nutshell, when you talk about DeFi, it's blockchain based. And blockchain based means that there are basically no intermediaries. What is in the middle, what is called the smart contracts. Okay. That is codes that sit on decentralized systems that allows, like peer-to-peer communication without anybody in the middle. Okay. So DeFi is, kind of a short form for decentralized finance, as opposed to the traditional finance that we have. So the traditional finance, which we now, when it comes to the blockchain space or that ecosystem, we call that the TradFi or traditional finance. So we can differentiate that from the decentralized finance. And when you talk about the traditional finance, which we have now, it means that for you to be able to store any value, send some value to somebody else, like me and you right now, if I need to send you some money, I need to go through my bank account or through Visa or and there are corresponding banks in the middle before the money can get to you. Okay. If we want to store money, I cannot just store money on the internet. I have to store it on a banking app, it's a banking account. So either it's Bank of America in America, or it's Royal Bank in Canada, or in Ghana, it's Zenith Bank or something. There's always an intermediary. Even mobile money in Ghana, you need an MTN in the middle, okay, to store that, okay. In decentralized finance or DeFi, there's no one in the middle. The only thing that is in the middle are codes, the smart contracts, okay? And these things are the ones that allow you to be able to transact, okay? Either you want to convert one crypto to another, if I have, Bitcoin and I need Ethers or Ethereum or Solana or Cardano, okay, you can go to a DeFi, one of the DeFi,
Protocols.
the one of the DeFi apps, dApps, we call them,
Yeah.
decentralized
Okay.
apps,
Yes.
okay, to do that. Yeah. So that is called a dApp, a decentralized app, okay? Like there's Uniswap, there's
Yeah.
SushiSwap, there's a whole lot of
Yeah.
them that can help you to be able to do that swap. Or if you want to lend money and all those. I know we'll come back to that later.
Yeah. Yeah.
But in a nutshell, that is what decentralized finance is. It allows you to be able to transact over the internet without anybody in the middle. Period.
Okay. Okay. Thank you very much for the differentiation between DeFi and also the Web3 and also those kinds. So now you made mention of some of the apps, right? The apps, right? So let's look at some of these DeFi protocols that you think currently is leading in the space, right? So, and for example, as you made mention of it, Uniswap, right? And I think we also have MakerDAO and we have Hive, right? And
Yes,
these
Aave,
this
MakerDAO, yeah,
mhm,
yes,
yeah.
yes, yes.
Which ones of these protocols are the ones which is leading and why is that?
Okay, so basically, these protocols that you mentioned, all of them have got their unique functions. Okay, so if you want what is called the AMM or the automated market makers, meaning that, okay, so now we need to differentiate, even in terms of blockchain space, we need to differentiate uh, these protocols, the decentralized protocols, from the centralized protocols.
Mm, mm,
So let's say you have an account with Binance or Coinbase,
mm,
okay? Or Kraken, whatever it is. If you want to swap one crypto for another, because what it is that Ethereum is the smart contract platform. Most of these protocols, DeFi protocols, about close to about 70% of them are built on Ethereum. Okay. Bitcoin is not a smart contract platform. Bitcoin, okay, is just an application of blockchain for currency, period. Most of these ones like Ethereum, Solana, Cardano,
don't know.
when we say they're smart contract platform, means that you can build different applications on them. And decentralized finance or DeFi is one of the applications that you build on Ethereum. And okay, so when you go there to, since you're talking about finance, there are finance companies that you go there to, let's say, exchange one token for another. If it's you go to the centralized exchange, like a Binance, I can put in a request, okay, for them to, let's say, tell them, okay, I've got Bitcoin. I need to buy Ether or Ethereum. What they do is that they will sell your Bitcoin for dollar and use the dollar to buy, Ethers for you. Okay. So we call that is a non-atomic no swap, as opposed to an atomic swap, which is that when you have two smaller tokens, you can do a direct conversion. Let me bring you into the fiat, world. If you have a Ghana cedi and you want to buy like Naira, okay, it's difficult for you to go to a forex bureau and ask them to sell it. They don't hold Nairas,
Yes.
okay? So you may have to buy a dollar and use your dollar to buy a Naira,
No.
okay? So you don't have a direct conversion between, let's say, a cedi and a Naira. So when you go to the centralized exchanges, that's what they do. Okay, so you will lose over there. Now, when you go to a decentralized finance like DeFi, they allow what is called pooling. So that is investors who have got these tokens. they can commit them to like different pools in pairs, like Ether and Bitcoin, Bitcoin and Cardano, okay, or Aave and MakerDAO, something. And these pairs they commit them to the pool. That is, they provide liquidity pools for these
Okay.
things, so that people who want to buy these things can just go there into a DeFi, open your wallet, and then the smart contract that is actually encoded in these things, they are the ones that are doing the job. So there's no one in the middle. Okay, so that's how come decentralized finance is a bit different from even blockchain that has got like a centralized system like a Binance or a Coinbase. Okay, so SushiSwap, Uniswap, PancakeSwap, oh, that's why they call them swap. They allow you to swap one for the other.
Okay.
Okay, but if you want to, let's say you have money, just as we do in traditional finance. Oh, I've got money. I want to put it in a savings account or maybe buy a term deposit and earn interest on that. Okay? Then you go to Aave, AAVE. Okay? Those ones allow people to stake their cryptos that they're not using. Okay? So that they can lend to other people. Same way that banks operate. That when you deposit your money in the bank will turn around and use your money and lend it to other people. Okay? So meaning that in the DeFi space, depending upon the particular activity that you want to perform, then you know which of these DeFi protocols to approach. Okay. So they don't all do the same thing. Some are also good for yield farming. Same way.
Yeah.
Means that you're there, you want yield, you commit to a liquidity pool, okay? And then they can lend these things to or pairs, they can lend to other people, and then you can make a return on that. Okay. So there are different companies in the whole ecosystem that do different things, depending upon what you want to do.
Okay. I think I now get it now. Yeah, because these protocols, as I said, I think we have different types, right? And everyone is meant for like different purposes. So I think it's important for us to do the distinction between them, because that is why I asked, which one do you think currently it's leading? Although like they are all meant for like different things, and I know that in this 2025, currently speaking, we know some of them might be leading, and it has a reason for that. So that was the reason when I was asking that.
Okay, so let me, sort of like take you on that as well. Okay, so most of the ones that I mentioned tend to be like leaders in the field. So in the swapping business or the automatic market makers, because in finance, when you say somebody's a market maker, that is what they do. They provide liquidity, means that they provide money for people who want to borrow money. Okay, so that's all that they do. They provide liquidity. I'm a company, and all I do is that I get deposits from people, and I provide it for people who want short-term liquidity. When we talk about liquidity in finance, we mean something that is a very short-term in nature. Oh, I'm a bank, I need money tomorrow because the people are coming to withdraw money. Okay, so liquidity is something that is easily converted into cash. Okay, all right, yeah. And so I mentioned Uniswap. So Uniswap is the leader. And when we talk about leaders, mostly you refer to what is called the total value locked, the TVL. Okay, means the amount of, the dollar value of the tokens or the cryptos that have been committed to that particular protocol. Because investors, same way, why let's say JP Morgan or Citibank or whatever, why are they big banks? Okay, because most people tend to trust them, institutions trust them, and they commit a lot of their resources to them. Okay, right, that is why they are the big banks. Okay, same with DeFi. For you to be able to measure, okay, So in banks, we might talk about the asset base. Oh, how much asset do they have? Okay, yeah, all right. Also, JP Morgan, sits on about maybe $1 trillion of
Yeah.
other people's money. Or BlackRock, oh, they have assets under management of about $10 trillion, okay, of people's money that they're investing, okay.
Mm-hmm.
In the crypto space, we talk about the TVL. That's the total value locked. Because when you commit these things to these protocols, you lock them for a period.
Okay.
Okay, yes.
Mm-hmm.
And so when you look at the TVL, then Uniswap is the biggest in the automatic market makers market, they're the biggest. And then you mentioned a maker,
Yeah, make a deal.
DAO,
My
yes.
deal. Yeah.
Yeah. They have what is called the decentralized, the stable coin. In fact, when talk about stable coins, okay, mostly stable coins are not decentralized. They're centralized and they are regulated by, authorities. But you also have what is called a decentralized non-stable coin. That is, you have the smart contracts that are making sure that the value of the crypto of that particular stable coin, in this case, Maker has what is called the Maker DAO, the
Make a
DAO,
deal. Yeah.
making sure that it doesn't really deviate too much from the dollar value.
Okay.
Okay. So, if you have a dollar-based stable coin, you have to make sure that if the dollar is depreciating or if the crypto is depreciating, then you have to post more cryptos to keep the dollar and the crypto value one-to-one. Okay. So somebody holds a stable coin,
Yeah.
like, like a Tether or USDC, you have to make sure that is one. Okay. Like we were discussing the other time.
That's
Yes.
fine.
So if you come to a decentralized stable coin, okay, you have smart contracts that are looking at these things, and then they watch this thing, and then if the value goes down, then you have to post more. Okay, they have to post more. So you don't have human beings that are doing these things. You've got the smart contracts that are doing that. Okay, so in that space, MakerDAO too is the leader there. Okay,
Okay.
so I've mentioned MakerDAO. I've mentioned
Uniswap.
Aave, in the
Have
lending space, and I've mentioned Uniswap, okay,
Uniswap.
that's
Yeah.
a different thing, okay. So these ones are the leaders based on the total value locked, the TVL.
Okay, okay, that's good. So now what I want us to do is, so for example, if let's say a beginner like myself, like our colleagues around or our audience, now who wants to let's say begin with let's say DeFi, right? Like a yield farm, as you made mention of, right? Without let's say falling prey to these scammers around. Um, how does a beginner start with that?
Okay, so what you do is that basically most of it runs on Ethereum. So these protocols, I mean, you do a bit of research. Okay, if you don't know, talk to somebody who knows. That is why now they're trying to license people to do these things. Okay, the difficult thing is that DeFi is still unregulated. It's still like stable coins. Okay, that are now regulated by the state and
The
you're being
state.
licensed. Okay, DeFi is still not regulated, so they are pushing for that.
Yeah.
Okay, I think most of these protocols are pushing for some kind of
Regulation.
a regulation to help people because, as you mentioned, yes, there are a lot of scams that go on because there's security. Okay, you the investor, you do your research or you get people to advise you, and then already, of course, you have a wallet. I would advise that you go with like a MetaMask. You know MetaMask?
Okay.
Yes.
Yeah, I just heard
MetaMask
the name.
wallet is basically the major wallet for Ethereum. Okay? It is their own wallet. And that wallet, and Ethereum is the major blockchain for most of these DeFi protocols. Most of these DeFi protocols, they don't have a standalone blockchain. They
Okay.
rather run. So that's what I mean. They are dApps. They are decentralized applications, okay, on Ethereum. So that
Okay.
makes them more robust because Ethereum is known as It's probably the second, most important or most robust blockchain in the world. Okay, it means that it is quite safe. Okay, so if you build, your dApp or an app on it, you know that it is quite solid. Okay, because you will be using most of the smart contracts of Ethereum as the base layer, and then these protocols themselves, if it's Uniswap that you want to go, you go there, you download, so through MetaMask, because you need ethers. Remember that you need ether to be able to run these dApps.
Yes.
Solana has got some of these protocols built on them. All right. But Ethereum, let's stay with Ethereum, okay? Because that's the one. So if you go download, a MetaMask wallet, okay? Have your the seed phrase. I don't know whether you're familiar with that, okay? We can talk about that later. It's a seed phrase. Make sure that seed phrase, you keep it safe. Because anybody gets hands on that seed phrase, they can, drain your funds, okay? So if that seed phrase is with you offline, nobody touches it, you've got your ethers in there. And the ether that you have in there is what allows you into the DeFi space, because all these protocols that I mentioned run on Ethereum, okay? And you will be able to, from Ethereum, connect to Aave, connect to Maker, connect to Uniswap, okay? To do whatever you want to do. From that point, it's very easy. Okay?
Okay.
So with these protocols that I'm talking about, these DeFi protocols that sit on Ethereum, they've been battle tested. The danger that they can have is when the code, the smart contract code, has an error in it. So these scammers can exploit that. Okay. But you, the investor, when the scammers kind of tend to breach these protocols and they drain funds, it doesn't really affect you because they have some kind of insurance that will sort of like compensate you.
Okay.
But if your seed phrase, that's your password, falls into somebody's hands and they drain your funds, you cannot blame them.
Yeah, that's true.
Okay. So there's a portion that depends on you, okay? But if it has something to do with the protocol itself, okay, then you know that at least you're covered. Same way that banks too tend to have insurance, there's fake insurance that, or if you save money in the US or Canada, you're kind of covered up to, let's say, $60,000 of any bank failure. Okay. Yeah. Beyond $60,000 is what you have a problem. But anything under that, you can recover your funds. The funds will pay back to you. Okay. All right. Yeah. So you make sure that, look, I would suggest you go to either a Solana wallet, okay? I don't do Solana, so I don't even know the wallet. But then, of course, these things are there. You can Google it, get a Solana wallet. And then from that wallet, you'll be able to access the DeFi protocols that sit on Solana. And for Ethereum, you can also access these DeFi protocols from your MetaMask and wallet. Okay? So all you have to do is that, hey, you're there, you buy your Ether, or if you're there and you have Bitcoin, you can convert same way. So once you enter into that DeFi protocol, okay, and you can connect, send your Bitcoin, convert them into Ethers from a central base, like a Coinbase, send it to your address, okay. So I can have maybe Bitcoin sitting on Coinbase, all right, and then sell it for Ethers over there and send it to my MetaMask wallet. And from there, I'm in a DeFi, arena.
Okay.
Basically.
Okay. Wow. Yeah, that's good to know. Because you see, as I said, so you made mention of it about always making sure that your password is safe. Don't give your password to people, because I think that is the only thing that we are facing. As we said, if you give it to someone and someone get used to it, and someone, let's say, just take your money out, that you don't have any issue with the company. But if it happens at the other side, because they have insurance for that, you are safe because you'll be provided with that, right? Yeah. But if you give your password to someone or someone has an access to your password, that is when the challenge comes. Because I was speaking to someone last week and he told me, are you sure these things are still safe? And I told him it's the same thing as what we have in these financial space, right? But the financial space at that side, or let's say the banks at that side, we have those intermediaries, as you said, right? Those things are there. But here you are dealing with yourself and the internet. So make sure that your password is safe. If you keep your password very safe, I'm sure you'll be okay with it. Although, yes, we have the scammers around, but if they do it across the other end, you have insurance to it, insurance to back it up. But from the other side, which is something I think it's good you explain these things to us. Now, I want us to.
And even, not to cut, just to add to what you're saying, when it comes to the traditional finance, the TradFi area that you and all of us, are involved with, same way we do internet banking, okay? Your bank accounts.
Yes.
If you give your password, okay, to your, my TD bank account or whatever, that person can go into your account, okay, and transfer money from your account somewhere else. Or if you give your Visa card, okay, to somebody, or you lose your Visa card, they take your Visa card, okay, and they can start shopping with it, okay, because the code, everything is on it. Yeah. So basically the same. With that, you cannot go and then blame the bank that, oh, my Visa card was stolen. Somebody, no. Even that, I know there's still insurance now. Look, for that, people, when you lose your Visa card and then quickly the bank is able to ascertain that somebody was this, there's still insurance for it. They can cover you. Okay. Yeah. But you know where your responsibility lies.
Yeah.
Okay. And where the banks or financial institutions' responsibility also lies. So if Bank of America or JP Morgan's servers were actually hacked, because that contains all the login credentials of about, say 400 million people.
Yeah.
And people get that information and then they start taking money from your account, they cannot blame you. Because their systems were the ones that was hacked, okay, not you. Okay. Yeah. So basically, it's still the same way. Okay. Anything that has to do with the protocol, you are covered up to a certain amount. And anything that has to do with your particular client or system that connects to that protocol, it's your problem.
Okay. Yeah, thank you. Thank you for that. So I would want us to look at you made mention of yield farming, right? And staking opportunities in this DeFi space that you made mention of. So for a beginner, myself, like colleagues around, let's say audiences and listeners, uh, can you like highlight how we can earn some, let's say, partial money from these but let's say partial, let's say passive income, right, from these DeFi space? Yeah.
Yes. Okay. So the user experience for for these dApps I'm talking about, okay, the ones that I've mentioned, is quite not simple. They made it in such a way that you go into your MetaMask wallet, okay, and then from there you want to access a DeFi space. It will list all the DeFi dApps, okay, and then you have your balance. All right. When you connect, okay, I want to yield farming or whatever that you want to do, or you want to a liquidity pool, so whatever financial transaction you want to undertake, it will take you to all the dApps, okay, all the protocols that deal with that particular one. And then you click on one, okay, and you go there. And it is quite very straightforward. It tells you, okay, if you want to do this, and it will bring up your balance. Oh, you have, let's say, 10 ethers in your account. You want the yield farm, you want to lock it in for, let's say, 10 days. It will give you the options, okay? So the way it is very kind of, it's quite intuitive. Similar to the experience that you have with your banks. I mean, if you've ever done like, a self-investing from your banking app. I mean, I have a brokerage account, okay? And in the brokerage account, there you go to buy stocks or you want to buy mutual funds or whatever. It is very, very intuitive. When you go there, if you have, even over here, you don't really have to have the knowledge, All it is that you tell, okay, you want to do this. If you want to lock it in for this amount of period, this is how much you can gain. If you want to do this, that's how much you can gain. Whatever. Or the ones that are not really certain, because in finance, there is a kind of a link between a risk and return. So if you want a much higher, risk, okay, then of course the returns might not be as sure. There's something called slippage or impermanent loss. Okay, I'm not going to go into that. It's very, very technical. Okay, so you can commit, a pair of cryptos. Let's say they will tell which price you can commit. Let's say a Bitcoin and Ether. Okay, you have to commit them in pairs so that somebody that wants to, let's say, has one particular coin or token that wants to buy the other one, okay, can also have access to it, So we call it, so you provide liquidity for those that are looking to swap, okay, for that. And there's something called the impermanent loss, okay? It's in such a way that because these things are automated, okay, they have something called the oracle. Oracle is what provides the information, the pricing, the current pricing of these tokens to the blockchain, to the smart contracts. Remember, you don't have a person sitting in the middle. Unlike, say, traditional finance, every day, if you work for JP Morgan, analysts will every day, they can access information on, let's say, Bloomberg. What is this thing? How much is it trading at? Okay. They can build an order book. Okay. And this person wants to buy this particular security. That person wants to sell that particular security. There's a price. And so there are people in the middle that are sort of making sure that the system works. Okay. And you're replacing that with a piece of code. Okay. So where does the piece of code get a current price from?
Yeah.
Okay. So that is where the issue of Oracle comes in. So smart contracts tend to deal with oracles. Oracles means that they are they don't sit on chain. They are off chain. When you say blockchain, it's like, okay, when you say something sits on chain, but it means that it's on a blockchain, okay? All right. So if the information is off, like in Web2 sites, it's off chain, okay? And the smart contract has to be able to communicate with a particular website to bring in the current information so it can know whether, let's say, this particular token is going up in price or coming down.
Yeah.
Like I said, it's a bit technical, but you don't have to know all that, okay? But that is what the scammers at times do. So we have scammers that will manipulate some of these websites that the smart contract is getting information from. All right. So then still, when you go and you're talking to these protocols, make sure that they're dealing with oracles like Chainlink. Chainlink is a big Oracle blockchain. It's well trusted that the scammers cannot influence that. So if Chainlink is the one that is acting as the oracle for a particular protocol, let's say Uniswap, then you know that, hey, you're safe. This thing will not get hacked. Okay? All right. So when it comes to the DeFi space, like I said, we have to sort of like be aware that now you're replacing human beings with a machine.
With codes.
So the machine is the one, okay, guided by code that is performing these things. And you have people with malicious intent, okay, that will try to deceive the machine, okay, to get information from some sources that they can actually manipulate, okay? So in this space too, you asked me about how to make sure, so that you make sure that, yes, you're also dealing with the gold standard. Same
Mm.
way that in traditional finance, if somebody comes and says, "Oh, look, how come you're not trading?" Okay, I'm trading with JP Morgan, I'm trading with Goldman Sachs, or whatever it is. And someone says, "Oh, I'm trading with some, uh, kind of a small company in the Midwest or something that nobody knows."
Yeah.
Oh, okay. Or some financial institutions in maybe, let's say, the Maldives or whatever. Those ones, you don't know them. Okay. So, but you still want to be able to, you want to be sure that you're dealing with the top-notch ones, the ones that have been kind of entrenched, tried and tested. You know that with them, you're kind of safe.
Mm.
The same way, as you keep asking me these things, then some of the gold standards will come out.
Yeah.
Similar to when, remember that there were so many tokens that came out, okay? And there was this ICO, initial coin offering. A lot of tokens turned out to be, bogus, okay? All right. Yes, they're pump and dump and all that.
Mm.
So, but people know that, hey, at the end of the day, Bitcoin, Ether,
It's
Solana,
Solana. Yeah.
Cardano, okay, XRP, these ones are solid, okay? So if you're investing in these ones, yes, at least you know that, hey, the returns might not be great,
But it's
but at
okay.
least you know that, yes.
And
If
you're
somebody
safe.
comes and oh, there's this token that, Charlie, if you buy it, you can have this so
Yeah.
much returns. And there are a lot of these scams that go on. I know people in Ghana that have been banks. People, oh yeah, they're all kind of pyramid schemes. Same way. What happens, these pyramid schemes, oh, they come and then the early ones who go in, they
Mm.
promise you a high return. And you will see a high return if you're, at first, one of the initial ones to go in.
Mm-hmm.
What the returns that you're getting is basically coming from those that are joining later. Okay.
Yeah.
They take it and give it to you. And then they also bring in more people.
Mm.
Okay. Yeah. So in all this, if you are new into this area, anything that sounds too good to be true is too good to be true. Don't go for
Yes.
it.
Yes. Yeah, that's
Okay.
true.
Yeah. Yeah. Yeah.
That's true. That's true. Because sometimes the offers that they give you, it's too good to be true. So at least you need to be careful. If you don't have anybody, just do research about before you even invest, or ask
Right.
anybody. Because I know some of our friends, they've fall like prey to this kind of stuff. So it's good. We also always do investigation and also research about it. If you don't know anything, get a second opinion about that, so that you'll be okay. That you're not going to lose your money. I know friends who have lost money. That is
Yes.
why they are not in. They are telling us, okay, crypto is very bad. They don't want to even have anything to do with it because they lost the money. And the challenge is they didn't do their research well, and they didn't get a second opinion as well.
Right. And look, I have fallen prey too.
Hmm.
What do you, because they're the same scams that they perpetuate in the Web 2 era, or period on the internet.
Mm.
Most of these scams are carried forward to the Web 3 arena, like phishing, okay? They will
Yeah.
entice you to go and click on some link, which is malicious, that will take you
Mm.
to a particular website.
Mm.
And I remember those ones that I lost. Okay, I had bought some, Ether. I bought it for $150. I think 2018, 3, 4 years later, it was valued about $1,000.
Wow.
And even me, I went to a renowned site, and then I got scammed into going to click on a malicious
Hmm.
link, and asked me to put okay, so it's going to MetaMask, put in your seed phrase. Put in my seed phrase. Next thing I knew, my
And it's gone. Ether.
Ether was gone. Was half an Ether was gone.
Wow.
Okay, but these things also happen in Web 2, phishing, same way. They would entice you to, or they will send you emails that is purporting to come from some renowned
Yeah.
company. The
Yeah.
address looks kind of genuine,
Mm.
but maybe it could be a little, one of the letters that, is being replaced, or it kind of being swapped in the wrong, order, which to the naked eye might not be all that obvious. And then you click on it. there are a lot of these scams that people, I know corporate treasurers that would receive emails kind of purported to come from the president of the company or finance directors that have sent monies to people that ended up in the hands of criminals. Okay. And this is not even a DeFi space. It's still in the current,
Yeah.
website and app, space. So most of these are, fraudulent, actors
Yeah.
or malicious actors. They're operating in the same, okay, on a different level right now because we know that, um, especially with new technology, not everyone is quite conversant, with it, okay? And so they tend to prey on people that are new to the space or that are a bit more greedy, okay? All right. And then they can actually get away with some of these things. But now that people, a lot more investors are becoming more aware as to how these people operate, you've got to be very cautious. So we can even do a later, kind of
Yeah.
session and talk about more of go in depth into these scams and how to prevent them.
Yeah, yeah. I think so it's very important because uh there's sometimes what they do also, again is okay. They can use a renowned investor, let's say Jim Cramer, right, on CNBC. Then that sometimes that is what they use so that you trust the source that okay, this guy has been working for CNBC for many years and he's one of the best investors. And when he tells you invest in this, invest in most about 90%, 80% of investors or even beginners would invest in it. That is what they do. For you to trust them, or they can get
Yeah.
someone from, let's say, JP Morgan or even these big banks. Then they will use their pictures and their names on their websites, pictures, which will
Yes.
entice you to invest in it, believe in what they are doing. So it's these things are there.
Yes.
So for me, I think as we said, the research and second opinion is the most important thing for you to do when you are trying these things, when you are trying to invest in this kind of stuff. You need to be very vigilant and do this kind of stuff. So I think my final question would be some of these trends that we are seeing in the space. So it will be that okay. So now, how do you see these DeFi involving with the current trends that we have, like tokenized reward assets? How are these involving tokenized reward assets and also DeFi? How do you see them? How do you see whether the cross? I think they sometimes they even call cross chain interoperability. How do you see both of them merging together?
Um, okay. So, what should I say? So DeFi basically is finance.
Mm-hmm.
Okay. So basically, as you know, there are different assets. Okay.
Mm-hmm.
So let's go back into the Web 2 area or like our current traditional finance. All right.
Mm-hmm.
Okay. Um, you have assets. So either it's an investment like a T-bill, um, a bank deposit, those things that you do in the traditional finance area, lending, borrowing, yeah, that is more the finance. Okay.
Yeah.
Now, when you go to the tokenized
Reward assets.
real world assets, you can have like not bonds or treasury bills that are
Mm-hmm.
tokenized. Okay. All right. Um, but the way that you connect them, okay, and I think I said this before, the connection between the traditional world and the decentralized world might be through stablecoins. Okay. So if you tokenize anything in the real world, okay, like a bond, and it says, okay, instead of you buying, like, let's say a T-bill, a physical T-bill, having it been, custody and all that, that T-bill has been tokenized. So
Yeah.
your ownership to that particular T-bill is a token. And if you can use that token and to convert it into a stable coin, because remember what I said, most of the DeFi, if it sets on Ethereum, you need ethers to be able to run, to access it. And then when you go to Ether, if you Uniswap, they also have, I didn't mention this, what is called a governance token. Okay. Because remember that these, because they are protocols, okay, they have to be governed. And that is the decisions as to even how to improve on Uniswap. They are what is called a decentralized autonomous organization. Nobody runs them, okay? The smart contracts. So it's a community around that would sort of like vote on issues as to whether to, if there's a new version of it, whether to change it or whatever. So those who invest in these, and at times they're also given governance tokens to be able to vote on these issues, right? Yeah. So these are so you need an Ether, you need these tokens to be able to be part of DeFi. If you have a token from a real world asset, okay, the way that you connect to that would be through a stablecoin. Because when you bring your token over there, remember that these are blockchains. And now, as far as we know, there are 3 companies that are really fighting to make blockchains interoperable. It's a very difficult thing. They are working on it, but they are not interoperable. Same way, like let's say in Ghana, before about 5, 6 years ago, if you had money on, let's say, a different network, Airtel, okay, money, you couldn't, come cross over to MTN, okay, right, or vice versa, okay. So because they sat on different rails, so if your real world asset token is on a different rail, you cannot bring it. But because stable coins are accepted everywhere, so that is why the US passed it. The Genius Act was an amazing thing. But if you go back everywhere in the world, Europe has got a MiCA for stable coins. Everyone, we realize that stable coins might be the first killer app of the blockchain that allows you to move from one chain to the other. Yes, because and the reason why they are so good and they are accepted is that they are backed by collateral.
Yes, by collateral.
They are regulated.
Yes.
Okay, right. So if I have a token on one blockchain representing ownership of, let's say, some land or some real estate or whatever, I can use that token, okay, and then look for, a way that, to convert it into like a stable coin, okay? And there are a lot of work that is going around that. Tether and other people are working on that, okay? So these things are called bridges. We can bridge from one blockchain to the other, okay? Get your stable coin and then bring it back into the decentralized and real, okay? So this is the major thing that blockchain is. If blockchain is able to work on that interconnectivity, that interoperability, it kills almost all the legacy systems. That is the biggest thing now, that interoperability. And remember that the world has seen it before. Before the advent of Visa, the banks couldn't talk to each other. So that's why if you have a card, okay, if you come from, I bring my bank card from Canada, debit card from Canada, I can go to Zenith Bank and then take some money because Visa is the one that makes the operation interoperable. MasterCard, before they didn't have that. Okay, so these are the ones. If not, how do I take my Visa, my Zenith Bank card to Canada, and it's cities by going to an ATM and I take dollars from there because it's Visa. If it is not a Visa card, I can do that. So now the next stage of blockchain is to that interoperability. Now stablecoins is helping a bit, but we need to make sure get to the point where the blockchains then can talk to each other.
I think that will be a game changer. That's what because it will be a game changer because if we can bring this, if we can do this, I think it will be very good for me. It will be very good for that. So we are just hoping and praying that these things happen very quick, very fast. And I know they are working on that, and
Yes.
definitely it will come to pass, but it will take a bit of time. So we hope that these people, like as we said, those who are involved, just bring this up together. So what we will do is today we would end here. But I'm saying that I'm just grateful for the information, always sharing the knowledge that you have, so that we can reach the wider audience, because so many people are so afraid to enter into this crypto space. For myself,
Yes.
the same thing. So it's good we are all learning, and we are reaching out to people as well, so that they can also just get to know what's the difference, what is there. Everything is a responsibility on you, right? You have the
Yeah.
responsibility. Don't give access to like your details, then later you blame the crypto space. That's it's this like it's always it's open to scammers. No, so I think as we said, it's on us. The responsibility is on us. Yeah, so I think that is what
Yeah.
I'll end. Yeah, I think that I
Okay.
can I can get your last voice. Yeah.
Okay. Yeah. So just to add to that, so education is key to this area. So if you can also get your people, let's say if you have a request from your
Mm-hmm.
network, that
Mm-hmm.
people want, we can organize classes. In fact,
Mm-hmm.
I've made a proposal to Bank of Ghana right now. In fact,
Mm.
Ghana is going to pass.
Oh, that's great. Oh.
Basically, okay, what's
Mm-hmm.
called it, the VASP, okay, law. And Bank of Ghana, being the regulator, okay, needs to train their own people. So they call it virtual asset regulation team, okay.
Yeah.
So,
Mm-hmm.
and then I know they're getting a lot of training from the Cambridge, Alternative Finance Department.
Yeah.
I've written a letter to the governor that I want to be able to localize that particular content
Yes.
for Ghana.
Yes.
Okay,
Mm-hmm.
so there's a lot of education. So most
Mm-hmm.
of these investors, same way, that people go and then they talk to the investors. We can organize classes, well, a bit, for a fee,
Yeah.
people to really bring them up, okay,
Mm-hmm.
ask questions, can do presentation.
Mm-hmm.
And because it is not a question of if, it's going to happen,
It's
okay?
yes.
So
That's
if you,
definitely going
yeah,
to
your
happen. Yeah.
network, you do get feedback from people that they want,
Mm-hmm.
we can start working on that.
Sure, sure, sure. Thank you very much for the time, and we do appreciate it. We really do appreciate it, because always coming on board, giving us the insights and the different perspective. I think it's really helping. So thank you for coming on the show again this week, and surely next week you'll come again with another topic. So I think we'll talk backstage. So yeah, thank you
Yes,
very much.
exactly.
Yeah, yeah,
Yeah,
we'll
if you
talk
get a
backstage
bit
further.
quickly. Okay.
Yes,
My
yes, yes,
pleasure.
yes.
Thank you for having me. It's all my
Thank you, thank
pleasure.
you.
Okay.
Okay,
All
okay.
right.
See you next
Okay.
week. Bye.
Bye-bye.
Bye.